Hello everyone, welcome back to our channel Sedji Stock Express. Today we are taking a closer look at V2 Retail, a company that primarily operates in Tier 2 and Tier 3 cities, offering affordable apparels and general merchandise through the chain of V2 Retail stores. Let's break down their business model and see what's the future hold for this growing company. Incorporated in 2001, V2 Retail aimed to provide affordable merchandise to the masses. They went public in 2007 and rebranded to V2 Retail Ltd in 2011 after selling the loss-making Vishal brand. Their motto, value and variety, truly reflects their range, catering to new middle class and middle class population. Basically, they provide affordable clothing in Tier 2 and Tier 3 cities. V2 Retail offering are divided into four main segments. Menswear, which contributes around 36% of their sale. They provide upper, lower, occasional wear, winter wear and everything. Ladies wear around, which contribute 26%. Kids wear, which contribute 25%, and lifestyle, which contribute around 13%. So all in all, they provide to every member of the family. They have formals, occasion, sportswear, ethnic and all types of clothes. Apart from that, they also offer deodorants, wallets, sunglasses, ladies purses and more. So now let's dive into their impressive Q1FY21 result. V2 Retail shown remarkable growth in first quarter of FY25. Revenue went up by 57% to 458 crore, whereas EBITDA increased by 56% to 55 crore. The net profit soared by 162% to 16.3 crore, which is almost double of their last year profit. The same store sales growth was up by 37% and they achieved a volume growth of 55%. The same sales growth number is very important because you cannot continuously open up new store, but increasing the sale from the already stores gives you an added layer of leverage. They also added 10 new stores, bringing the total count to 127. While the average selling price was at 260, remaining flat year on year. During their Q1 FY25 Concall, V2 Retail shared ambitious plan and guidance for the future. They aspire to add 50-60 stores in FY25 and 60-70 stores in FY26. Overall, they want to add 120 stores in next 3 years. They are aiming for a PAT margin of 4.5% for this year and somewhere between 4.5 to 5% for the next FY26. They are also targeting a gross margin of 27 to 29%. They guided for a revenue growth target of 30 to 40% CAGR over the next 3-4 years, while they are aiming for return on equity of around 20-22%. Their target for SSG for FY26 is 10%, while for FY26 somewhere between 15 to 16%. Interestingly, 18% of their sales come from private label. So what is a private label? Private label is a garment which is manufactured by other but had a label of the store from where it has been sold. So 80% of their sales come from private label. They want to go to 100% in coming next 2 years. 16% of sale comes from their own manufacturing. It does not plan to increase the manufacturing because outsourcing manufacturing has no impact on margin. So इनका fixed cost नहीं बढ़ने वाली है, while the margin they can protect. For them, Q3 is the strongest quarter, followed by Q1, Q2 and Q4. This is understandable because Q3 have most festivities like Dashera, Diwali and weddings. In fact, while Q4 and Q2 are the weakest because Q2 you generally see lots of rains. all the new store which they are planning to open in FY25 will be open in same state, and they believe the next leg of growth will come from this new state. Now let's look at the valuation. The company guided for a growth of 30 to 40% and a PAT margin of 4.5%. If we assume a 30% sales growth and a PAT margin of 4.5%, the net profit for V2 Retail comes around something around 68 crore, which gives us a PE ratio of 51. But if we assume sales growth of 40% and a PAT margin of 4.5%, the PE ratio comes down to 47. This PE range of 47 to 51 is good for a company which is targeting a 30-40% growth. All in all, the stock is not that expensive, especially considering the growth engine it has and the future guidance the company has given. That's it for today breakdown. If you find this video useful, make sure to like, share and subscribe to our channel Sethi Stock Express for more insight into the financial results and company analysis. Thank you for watching. See you in the next video.